Hello, I'm Tammy Green, and this is your Week in Forex from MaxiForex. Today we'll review last week's market highlights. The euro took a severe drop this week after credit ratings were cut for Greece, Portugal, and Spain. These cuts ultimately pushed safer currencies higher. Panic persuaded investors to invest in the dollar, yen, and gold. This is a strong example of risk aversion, which we may be seeing more of as fear of possible rating cuts for Ireland and even England may be ahead. Concern grows over Greece's possible debt default, as it has come to light the Greek debt estimates may be double what was originally calculated. Today we'll review these issues and more with financial analyst Martin Smith. Welcome, Martin.
Hi, Tammy.
It seems that the euro has a really hard road ahead. Could you tell us a little bit more about the crisis that Europe is facing?
Well, it's unfortunate, but we are seeing traders running from the euro like the plague. In fact, the euro is currently being abandoned at a rate that has not been seen since the collapse of Lehman Brothers. This may be so severe that the threat of a broken union may be imminent for the European Union. It was reported that this month, pension funds and banks sold the euro at a lightning rate.
Is it possible that the members of the European Union are now questioning the longevity of the Eurozone?
Well, there is much speculation about this right now. Many assumptions help define the makeup of the euro, and these are now being re-evaluated. What is crystal clear is that there are huge differences between regions of the Eurozone. In 1999, when the euro was born, it was immediately a rival of the US dollar. However, with the crisis that began in Greece, this one country that comprises only 2.6% of the region's economy has forced an 11% decline for the euro. Bottom line, the euro is vulnerable. The idea of having a monetary union without a political union of any sort of federalism creates huge risk. And the problems that the euro are facing appear to be creating a very nationalistic attitude throughout parts of Europe.
Okay, so Portugal had a credit rating cut along with Greece and Spain. Do you think it's possible that the EU is going to face the same problems they have with Greece now with Portugal?
Well, many reports say that Portugal should be able to avoid needing a bailout like Greece. Last month, an austerity plan was announced that may gain parliamentary approval and be accepted by Portugal's population. Bonds in Portugal have been hammered by investors, and a strong plan including tax hikes, spending cuts, and even Irish-style wage reductions may in fact be necessary, but certainly won't be popular. The dynamics of contagion from Greece will likely force Portugal's government to widen the existing measures. Also, the minority socialist government last month unveiled a plan to cut the budget deficit to 2.8% of gross domestic product in 2013 from last year's 9.4%. Now, the measures include caps on public sector wages and government spending. Although considered solid and credible by Brussels, the program may be insufficient if economic growth falls short of the government's projections.
Tell us a little more about the Irish-style wage reductions that you just mentioned.
Well, some believe Portugal should follow Ireland's example. Last year, they managed to soothe market fears with a tough austerity plan, including salary cuts for public servants. And many believe that without taking the strong example of Ireland, Portugal will be at greater risk to go the way of Greece.
So on Thursday, we saw crude oil reach a 2-week high. Could you tell us a little bit about the factors that impacted this rise in the market?
Well, oil's rise followed upbeat US economic data and greater risk appetite on account of Greece. Energy markets were also aided by the Fed, which on Wednesday pledged to hold key interest rates at low levels for a longer period. The broad advance across commodities markets also came as risk appetite was whetted by the euro's jump against the greenback.
Do you have any technicals for us this week?
Well, sure, I haven't talked about gold in a while. Gold pushed through its Wednesday high at $1,171 to resume its upside offensive. It was initiated from the $1,044 level. Now, this development has moved upside risk towards its monumental level at $1,200. We may see hesitation on the initial test, but if it eventually gives in, a run at its December 2009 high at $1,226 will follow with a loss. Now, as I mentioned earlier, crude is also on its third day of an upside bullish movement following its recovery. With that said, we're expecting the commodity to head further towards the $87.04 a barrel level and finally resume its medium-term uptrend towards the $90 a barrel level.
Well, thank you, Martin, for joining us once again. Until next week, I'm Tammy, and be sure to visit us at MaxiForex.ru.